All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Wednesday, May 17th, 2023. Thanks for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on our YouTube channel. Let's go ahead and get started. A couple of things out today. House Leader McCarthy says he thinks the U.S. won't default as debt talks inch forward. That's enough to give futures a little bit of a boost. 161 points on the Dow, 34 on the Nasdaq, S&P up 0.43%. Russell up 0.66%. We know Russell's been beaten down. Crude oil up 0.55%, 71.25 a barrel. Gasoline futures $2.50, up about 1%. 10-year Treasury yields have fallen a little bit, 3.526. The dollar is up 102.91. Markets don't seem to care. 17.54 for the VIX. That's down 2.5%. Copper is up 1.62%. Euro dollar up down 32 pips, 108.29. 137.15 for the dollar yen. 124.71. Down 14 pips for the pound dollar, and Bitcoin futures down about 1%. 26,670. 17.93 for Ethereum this morning. First thing I want to kind of get out of the way, we did talk about futures, Nasdaq futures yesterday. We did catch that trade. But again, let's keep an eye here. Back to Nasdaq futures, 13,550. That's the level I'm looking for. If we can break out of that, and I expect us that we will. The reason is that tech is obviously has the strength above all other sectors, and mainly just about 5 or 6 names. But again, since they're heavily weighted on the Nasdaq, we just have to play the charts. We're above the 100-week moving average. Remember, that was our key level of resistance. So the Nasdaq already broke it. The 100-week moving average. That's a huge, huge level. On a wider time frame. How about we go to the monthly? Where are we there? Oh, sorry, that's the weekly. Let's go to the 20-year monthly chart. And we're above the 20-month moving average. That's huge. So again, now we're starting to see the Nasdaq is starting to push higher. We're going to get some deviations here and there. Yes, obviously we'll get some pullbacks here and there, but it looks like as we get above 13,626, that 50% retracement, that for the most part, we're just going to go higher. And we need to kind of keep an eye on what the next level might be. It won't be a straight shot up. We've been saying that really since October. Here's the low of October, 10,484. That was the 200-week moving average on S&P. We got all the way here, about 3,512 Nasdaq points. Wow. So again, we're starting to get to that point that we're going to break out above these August highs, and then 14,367. And again, guys, that only gets you back to February 2022 levels. You know, it's a breakout, yes, but we got a lot more to go. So, you know, if you're someone that you feel like you missed the train, or, oh my God, I missed the bottom, and again, it happens to everybody. It happens. There's a lot more to go, guys. Again, there's a lot of market to go around here, and just keep in mind that in December and November of 2021, we were 16,767. We still got about 3,200 more Nasdaq points to go just to get back to where we were. So missing out, there hasn't been much to miss out on. Obviously, the October bottom that we talked about, the 200-week moving average on S&P, we're above the 100-week moving average on the Nasdaq and Nasdaq futures. Again, guys, we're starting to cook now. Things that can get in the way of this, obviously geopolitical issues, that'd be big, but we just had earnings. The Fed, for the most part, we know what they're talking about every day now. It seems that we have Fed speakers every day. But the market is pricing in rate cuts. Rate cuts are troublesome. Why? Because if the Fed cuts rates, which is what the market's pricing in by the third quarter, I think JP Morgan had a note on it, something is a matter. There's something wrong, whether it's banking or unemployment is spiking. So again, there is obviously some risk out there. The best case scenario is that we hold. We don't get any more rate hikes, but we don't cut. It's kind of like the porridge. Not too hot, not too cold. That'll kind of give the Nasdaq a little more room to go. We'll break those August highs. The debt ceiling talks I'm not too concerned about. I've been retweeting those headlines. But the United States is going to pay their bills. I mean, all of this is really posturing, and that's fair. But the market obviously is worried, and as I guess it should be. Because if they don't pay their bills, that's a default. We don't want that, obviously. So, and then that might push the narrative to get the rate cuts. Maybe that's it. Are the banking woes over? We don't know. That's a lot of different scenarios out there, but really comes back to the same place, that 100-week moving average. Now, we'll see where we end the week in terms of Nasdaq. Again, it is only Wednesday, and on Friday we have OPEX, options expiry. So, you know, this could all be for naught, and we can pull back under the 100-week moving average again, and then we're back to where we started just this Monday. So we'll see if the Nasdaq gives us a little more room to the upside, which I expect it will. Again, I'm waiting for 550 for the break. We'll re-enter some Nasdaq longs and try to get to that TP1, which is 13,626. We caught 25 points yesterday, so well done. We also opened Micron yesterday, and Micron reversed on us right as we got in. That happens. It broke my alert of 65. I'll show you on the daily here. 65 was my alert, as you can see right here. That's pretty much the level. It got to around 65, let's see, 65.33, which is right at this point, which was the August highs, and then it just rejected. And, you know, that sucks. Don't get me wrong, but that's just the reality sometimes. We'll go to the hourly chart and take a look at it. We have this drop here, 63.36. We're starting to get a little bit of a push here. We're just going to be, you know, 1 day waiting. And, you know, my thought is I want it now. You know, we all want it now. I get it. We want instant gratification. But it just sucks to be caught in that move on Micron. But again, we'll just get that today. I think we're going to catch that today with the Nasdaq pushing higher. But you could see that we held here the 200 weekly moving average. So at least that. It's not like we really broke anything too meaningful. And that's what we're going to kind of keep an eye on. Get Micron today. We want to break that 65 level again, like we did yesterday, and then we fell. Very similar to Amazon. Amazon, we had the same trade from last week. We got as high as 20%, pulled back a little bit towards the end of the session. We're starting to push now. We're up about $1 this morning, so we should be able to catch Amazon first thing this morning. I went ahead and sent a note on Discord to our members on the watch list, premium and masterclass, and I said, better late than never, I guess. Now it gets interesting. The 117 level is actually next resistance based on the 4-hour and the daily. But 120 is a very real possibility if Nasdaq momentum builds. These mega caps are in demand, and we are, the 115 strike is very close to the money. We're at 114.39. So let's go ahead and get to that 4-hour chart and kind of give ourselves a roadmap here. You could see just upward trajectory. We know the momentum is to the upside. We're starting to break. This is the after earnings wick, and then we had the pullback due to the cloud forecast for Amazon. The AWS forward guidance on their profit margins, that was enough to smoke the stock from around 122 to around 101. Fine. So now we're at 114. So the idea is just to recapture the level that we were just at, which is 120. Could we get there by the end of the week? If we get a short squeeze, maybe we get that debt ceiling deal, something along those lines. Amazon can really push. Target had a decent quarter as well. Let's take a look at Target this morning. Target is up about $2 this morning. So Amazon, you know, doing okay, you know, with that information, and it's up about $1. So we'll see if we catch that this morning. We'll see if we get Micron this morning, and then we also are taking a look at Caterpillar. Caterpillar has a gap to fill here at 204.11 on the daily chart. Take a look at this. You could see the gap fill is actually right here at 200, and pretty ugly chart at least. So value stocks have been taking a hit while tech has been kind of doing all the heavy lifting. If we go to the S&P 500 futures, we can see pretty much just chop zone action, yet kind of holding up to this green trend line, relatively close, 41.20-ish. 41.50 will more likely hit today, just due to the good news in terms of the debt ceiling. House Speaker McCarthy saying we're not going to get a default. So hey, better than the worst case scenario, right? So 41.50, that's kind of our magnet line. If we can get back to around 41.70 to 41.60, that'll be a win for the bulls. We had a red day yesterday, so I expect a little more pickup as we go along. But Friday is OPEX day, so we'll see if we get a little more volatility. The volatility index isn't really showing much. You can see how muted it has been, really just for the past week. So again, the idea is not to put too much risk on the board. Obviously, the idea is to keep an eye on the charts, kind of not put yourself in a box where you start doing some 0 DTEs or some crazy nonsense, because you just might get chopped to hell. So, you know, set up focus on setups, stick to your analysis, and I think more than likely, in my opinion, this week will be a good one. Just a little delayed. Amazon, we were just literally a day late last week. So we opened that on Thursday. Friday it fell, and then we soared. The options that we had on Amazon were soaring anyways. We got it high as 20. That option was down as much as 75% just the day before. And that's kind of the power of options, man. You can't really give up on it. Funny story, I had Tesla calls right before and that was just personal. And then the announcement came of the CEO for Twitter, the new CEO of Twitter. The stock soared. And I closed it because it broke my alert. I didn't stick with the analysis. I didn't stick with my guns, and I would have made bags on it. But that's kind of the deal. Kind of damned if you do, damned if you don't. And while doing this, you always want to be cognizant of risk. There's no such thing as no risk. There's always risk. It's kind of the game people play. There's always risk in something that you do. But we'll go ahead and leave it there, guys. Again, 13,550 on the Nasdaq. Keeping an eye on Micron. Keeping an eye on Caterpillar. Keeping an eye on Amazon. Mara, I need a damn miracle. Mara, I need basically the miracle of all miracles for that thing to soar. And again, that happened to me on Tesla, which I closed. So at this point, I'm going to stick to what I say and stick to what I got, because that just sucks. What do you think about Google for the day? I had Google calls from last week I did on my own. I am in the money on those Google calls, the 120s. I'm still holding them. I'm waiting for a break of 122. If 122 does break, then I'll more than likely fill those. I'm kind of thinking of the 121 calls and then getting into Google for next week at a 122 clip. Buy us some time. Keep the strike relatively low. It's a breakout across the board. I think we get to 122 on Google. That's kind of the resistance level, 122 to 123. And once we get there, again, we could always break out or we could always reject. But you also have a gap fill here at 113.58. So again, if we break 121 on Alphabet, which is Google, I would say that 122 calls to 123 calls. Buy some time for next week, and I think that's probably your best bet. In terms of the indices, Qs, and SPY, it's so choppy, so the Fed is just going to absolutely obliterate you. Your best bet is to stick to futures. I don't even think ES is worth a shot, but I do think Nasdaq futures is worth a shot. Google, what was it? Gold broke my alert. Let's take a look at gold rather quickly. You can see it broke the 50-day moving average. There is a level here around 1983. If 1983 does break, we may get a little more pullback, maybe down to around the 1932 area, which is your 100-day moving average. So again, we're below the 20, check mark. That's our momentum indicator, right? We talked about that. The 50-day moving average, another indicator. So again, we'll see if we break 1983.70. You could always do micro contracts on gold and again, maybe play it down to 1932. We'll use that 2000 level as a stop. Not a bad swing trade. Unless you think bad things are happening in terms of the weekend. Again, that's always a risk, we know. But I'm starting to look at gold to the downside here. I think gold pulls back a little more. 1983, the dollar is kind of pulling up a little bit. We'll take a look at that here, the dollar. Now at the 100-day moving average. I mean, it's still downward, don't get me wrong, but we're getting very, very close to a possible move higher to 104 to 105. That's going to hurt commodities. That's going to hurt gold. And that'll definitely hurt Bitcoin. So keep an eye on Bitcoin. Man City or United. Man City or Madrid. I'm a Madrid fan. I've been to a Clásico in Madrid. Real Madrid is my team. My favorite British team or English team is Man United. So I definitely am not a Man City fan. So Real Madrid plays today at 3 o'clock. I can't wait. Champions League. It's 1-1 going into Manchester City. So there's a team that could do it, is Madrid. And if Madrid wins another back-to-back title for UCL, you might as well just call UCL the Real Madrid Invitational, because that's their tournament. And we'll go from there. Hala Madrid. Let's have a great one, guys. Have a great rest of your day. I will see you guys tomorrow for the next morning note. See you then. Have a great trading Wednesday. Cheers.